This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, June 2nd, 2016. Euro dollar. So the euro is seeing a bit of a correction after recently breaking down below 112, although the price action is classified as corrective and any additional rally should be very well capped ultimately ahead of 114, ahead of the next downside extension below the recent lows that we saw that came in at 110.98 and towards 110.58 further down, which then guards against 108.23, that next key support. Again, the latest pullback that we've seen over the past several days suggests that the market has shifted its focus back to the downside, and so any upside is viewed as corrective while the market holds below 114. Sterling dollar. So cable has retreated after once again stalling out ahead of some critical resistance at 147.70, and this puts the focus back on recent support at 143.33 in the form of that low that we saw back on the 16th of May. A break below there would be the next significant development, exposing deeper setbacks towards 140 further down, which guards against that 7-year low from earlier this year at 138.36. Dollar yen. So dollar yen has stalled out ahead of 111.89 in recent trade, which does keep the downtrend intact and suggests that we could be seeing a fresh lower top now in place at 111.45 ahead of the next downside extension, potentially back towards and below the recent multi-month and yearly low at 105.55. Really, a break back above 111.89 would be required to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to trade with a more constructive tone overall, with the market expected to consolidate ahead of the next upside extension beyond 1130 and towards a retest of the multi-month and yearly high at 112 further up. Look for any setbacks to now be very well supported ahead of 109.55. Aussie dollar. So Aussie has entered a period of consolidation after recently breaking down below the 200-day moving average and trading down to fresh multi-day lows at around 71.45. At this point, though, the pressure remains on the downside, with any rally seen well capped ahead of 74.15 in favor of continued depreciation back towards potentially the 2016 base at 68.27. Dollar CAD. So signs of a meaningful base carving out in dollar CAD, and this will be strengthened on a break above 31.89 in the sessions ahead, which will open the door for a more pronounced move up towards 135. At this point, look for any setbacks to be well supported ahead of recent lows at 29.11, though ultimately it would take a break back below 27.72 to negate this constructive outlook. Kiwi dollar. So Kiwi has seen a nice little bounce in recent trade, though ultimately the pressure remains on the downside, and the market is expected to put in a lower top ahead of the next downside extension below 66.75 and towards next key support at 65.46 further down, which guards against that 2016 base at 63.47. Any rally should now be well capped ahead of 69. SPX 500. So the S&P 500 has seen a nice impressive rally over the past several days, though ultimately the market continues to stall out above 2100, and so there is risk for another topside failure ahead of the next downside extension. But we'll need to see a break below 2020 at a minimum to suggest that the market is putting in a more significant top and accelerate declines. A break back above 2112 will put the immediate focus back on a retest of the 2015 peak at 2133 further up. Gold. So gold continues to trade with a choppy tone over the past several weeks, though overall, while the market holds above some previous resistance turn support in the 1190 to 1200 area, there is risk for additional upside back towards 1300 as this chop continues. It's going to take a break back above the 2015 peak at 1307 to really get this thing going and open the door for fresh upside towards 1400 over the medium term. Again, only back below 1190 really compromises the newly adopted constructive outlook for gold.